back to another video. This is Alex Muir, helping millennial professionals reach peak mental and physical performance. And in today's episode 3 of my financial ed series, we're going to be talking about loans versus line of credit. Now in this video, I'm going to be discussing my top 3 tips for utilizing loans versus lines of credit. And tip number 1, determine what you need that money for. Now, using money for a loan or line of credit will depend solely on what you need the money for. Now, for instance, for a line of credit, you can reuse those funds as much as you want. It's a revolving type of credit product versus a loan. A loan is something that's a one-time installment that you borrow the money, and then if you do need additional funds, you'll have to reapply. But keep in mind, if you might need additional funds in the future, line of credit might be a better option for you. But if you just need funds right now, and it's going to be a one-time thing, for instance, additional cash for a wedding, home renovations, some debt consolidation, then you're going to pay a fixed rate of interest and have a fixed monthly fee or monthly payment for your loan. On the other hand, your line of credit, you're going to pay interest only on the amount that you use from your line of credit. And in most cases, a loan maxes out at up to $50,000 that you can borrow. And I think the same is for a line of credit. Which brings me to tip number 2. Now I know I touched on a little bit of the details in my last tip, but tip number 2 is determine the level of debt that you can handle or afford. The thing with taking on any kind of credit or debt is you just need to be aware of how much you're willing to take on. Everyone has their own thresholds for debt that they can handle, and again, only borrow what you need for what you need the funds for. If you're using it for too many other things, you might wind up being in a situation that you might not want to be in the future. Always keep in mind, if you can't repay your debt in full, or pay off chunks of that principal in the future, taking on a loan or line of credit might not be a fit for you. But if you're good at managing your debt load, you pay all your bills on time, you have excellent credit repayment history, and level of income, then you're going to be in a good position to borrow money when you need it. Because everyone, whether they like it or not, will need some sort of credit product in the future. If you have unexpected expenses, weddings, school tuition, trips that you want to go on, home renos, those are all to name a few examples. But just keep in mind that it's all going to depend on what fund or credit product you borrow. It's going to depend on how comfortable you are with what you can afford. So in some cases, a loan might be a better option because you can get that loan payment down quite a bit as long as you have good repayment history, credit, and level of income. And this brings me to my last point, tip number 3, determine which credit product is right for you, whether that be a loan or line of credit. Now, based on what I've said on the examples above, in most cases, a line of credit might be a better option for you, for some people, because you get to reuse those funds over and over again. As long as the beauty is you can use the funds and then you can continue to pay the line of credit off. Now, the only downside is it's revolving. So, if you keep using that line of credit to the point where you don't have any funds remaining on there and it's maxed out, then you're going to be paying the full interest rate on the entire balance in the future. But the majority of the time, if you're only using your line of credit for emergencies, then you're only going to be paying interest only on the funds that you use. So it can be very beneficial. With loans, it's a one-time installment, like I mentioned on the examples above, and you're only using those funds usually for once. And then if you are looking to get additional funds for something else in the future, then you'd have to reapply. So that's the major difference. So if you're looking for more flexibility and be able to use funds over and over again, line of credit's a great option. If you're okay and you've only got something that just came up that you want to apply for a loan and get that dealt with, and then you won't have to worry about anything for a little while, then a loan might be a better option for you. And in some cases, again, don't quote me on this, but depending on your repayment history, level of income, and credit history, sometimes a loan is a little bit easier to apply for as well. So, and again, I know a little bit more about all these kinds of things because I have a background in banking. I spent 4 years in banking, and I learned a lot of tips and tricks that I want to share with you guys. So hope you guys all enjoyed this video. If you liked this video, hit the like button, comment, rate, and subscribe. Take care.